I appear a little grumpy this morning is because technology wiped out an hour's worth of prep. So, this is about as grumpy as I get, though. All right, what do we got going on this morning? We got the markets up slightly with almost no economic news, except the BBB. So people are worried about whether it'll pass or not. It's probably going to pass the Senate later today, but the House is all in an uproar saying, that's not what we sent you. So now the House is going to have to look at what the Senate did and make a decision in the conference and the committee, conference committee. They're going to have to decide, what kind of compromises to make there. Then both houses have to vote on it again. My guess is they'll figure something out by Thursday. They don't want to disappoint the president and not get this bill done by the 4th of July. But having said that, that's not my prediction. It's only an estimate, a kind of a that's probably what's going to happen, as opposed to that's what is likely to happen. Is that the same thing? I think it's not like a 90% chance. I think it's a 60% chance they're going to deliver this by Friday. Okay, so the markets are up slightly with not much news. That's the whole point of what I just said. And then Tesla on the other side of the coin is down just a little bit, but that's quite maybe good. I know we're supposed to be going for all-time highs this week, but that might be good that Tesla's only down a tiny bit this morning because the big beautiful bill made things worse in the Senate for Tesla. So where we were supposed to get an end to the $7,500 credit starting in January of next year, which would have given us 6 more months to take advantage of it. Now the Senate wants to end it at the end of September, which could give us a great third quarter. But unless Elon comes to the rescue and offers unsupervised by that date, I could see a fourth quarter that could be a little soft. We need that unsupervised, Elon. What do you got? I guess you're going to see what happens here in Austin and see how things build up over the next few weeks, and eventually we're going to get to that place where you're going to feel really good about what's going on this ground, and then we'll get unsupervised. And when that happens, I think it's going to unlock a lot of car sales. We also haven't seen the Model Q, as everybody's wondering. This is the last day of the first half. Tesla has recently been kind of on the nose with regard to trying to hit their prediction dates, but nothing yet. No clarity there. All right, let's see what else do we have here. We've got AJ reporting this morning. He says this is a review of Tesla's trading performance around release of deliveries and deployments and earnings for the 10 trading days prior to release, the run-up. And then what happens after, et cetera. He says, Q2 2025 key considerations. As I have been telegraphing for several weeks, data implies deliveries are coming in quite low. Consensus is still significantly above his estimate, with many analysts estimating somewhere between 350 to 395. He says, I believe the street number will be significantly lower than the implied midpoint and probably closer to 350 to 360 when all is said and done. He says his fifth estimate, based on global trends, I expect the number of meaningfully lower than consensus implied. He's not going to share his final estimate until after the China release later today. He recommends note, last quarter deliveries were disappointing, but the share price performance was noisy because the release coincided with fake news of Elon leaving Doge. Elon denied it, and then blah, blah, blah. He says, I'm not implying Elon lied, but he says the result was that things were noisy. What is AJ's expectation for this week's delivery release? In the neutral market, not strongly positive, negative, we'll likely see weakness in the stock, which is what we're seeing this morning. The only exception would be a blowout energy deployment number like last year's Q2, but I deem it unlikely due to the guidance that he's seen previously. I'm saying 12.5 for 3 billion. Additionally, investors likely have long anticipated weak sales, but there's a segment of the market which is responsive to stale news from an informed investor's perspective. For example, weak Q1 2025 sales on the new Model Y transition was a recent example. Selling pressure on vandalism, etc., compounded on weak sales to drive stock performance. All right, Gary Black, though, he says two main reasons Tesla is moving lower this morning. Number one, the second quarter delivery estimates and are going to continue to fall. He says Tesla, investor relations at Tesla compiled consensus shows estimates are 385,000, down from 435,000, and he thinks it'll go lower than that, which is what AJ just said as well. Gary Black says his estimate is 370, which is much higher than AJ's. And then he says, number two, the Senate version of the Trump tax and spending bill continues to propose eliminating the $7,500 upfront EV purchase tax and the $400 used car advantage. While there's been no proposed elimination of the separate ZEV regulatory credits, Trump signed a resolution requiring California to eliminate their requirements. So those are all working against this. He says, we have seen no impact from Friday's successful Tesla fully driverless delivery from Austin factory. Although I will tell you that when I tell people about that, they're more interested. It's more visually interesting to them than just the general Austin release. Also, I've noticed that there's kind of a soft blast from a lot of headlines with regard to the Austin release because of the safety rider. People are saying, well, it wasn't really full release. And it's just a lot of people making that kind of noise. So when they take out the safety rider and start expanding the territory and allowing regular folks to ride it in the taxis, that might be a little bit of a catalyst. BYD, according to many people this morning, so I did a grok analysis of this. BYD, China's leading electrical EV manufacturer, is facing scrutiny over its financial health amid an intensifying price war and supply chain issues. Reports are suggesting BYD's aggressive price cuts with discounts up to 34% aim to clear excess inventory and boost sales, but are squeezing profit margins. Analysts, including GMT Research, claim BYD's reliance on supply chain financing masks a debt burden, eliminating true debt of 323 whatever. The opacity on their the opaque way that they're talking about their financials is creating concern. A major dealer network collapse in Shandong involving 𝐄𝐦𝐚𝐢𝐥 Holdings left over 1,000 customers without services, highlighting cash flow strains. Musconomy says alleged BYD may be inflating profits and risking crisis that could ripple through China's EV supply chain, impacting players including Tesla and NIO. Despite robust sales growth, 41% in 2024, overcapacity and regulatory warnings about unsustainable pricing signals challenges for BYD. BYD's global expansion, particularly in Europe, continues, but domestic market saturation and debt concerns cloud its outlook. I also, before my crash, I had estimates from AJ, I think it was, yes, that they only make about $300 or $400 a car. And then last night, Stephen Mark Ryan had his estimate where he did an analysis, and he thinks they're losing $500 a car. So, yeah, interesting stuff with regard to BYD, but the concern here would be not only that BYD could collapse, although everybody expects the Chinese government would save them, but rather that it could be interfering with supply chain as some of the companies the BYD is stiffing, not paying for a year in some cases. Some of those folks could go out of business, and it would hurt everybody's supply. All right, this is Randy Kirk. Please hit like. Please hit like. Would you do me a favor and hit like today just for fun? Because I'm grumpy because of the tech. Something happened this morning that's never happened before. I have no idea why it happened, but it wiped out all of my content. Anyway, hit like, subscribe, hit notified. We do have Larry and Brian coming up today. Normal programming. Yeah, that's good. Okay, let's go ahead. I think I had another person join Patreon, but I didn't write it down. All right, new Fed chief coming in weeks, says the Treasury boss. Treasury Secretary Bessent says the tariffs are not impacting prices, according to the information that he has visibility on, and they are working on Powell's successor. He could land in weeks or months. Who is going to take the Fed throne is the question. All right. Well, President Donald Trump has been adamant that his tariffs will bring factory jobs back to America, according to a Fortune article. But higher import taxes will likely push manufacturers to move operations back to the U.S. This is according to Bank of America economists. But so-called reshoring might incentivize firms to put more robots than humans on the assembly line. A lack of skilled labor and high costs remains the big impediments as companies try to come home, Bank of America warns. Automation may be the key to unlocking this reshoring, potentially boosting the sluggish productivity of American manufacturers without meaningfully increasing employment. Well, we've been talking about this for a long time. There's going to have to be significant automation in order to reshore most products, but we are already seeing General Electric bringing back 800 jobs, they said, as they bring washing machines and dryers back. So 800 jobs is not jillions, but it's significant. Evidence of the slowdown in the sector is mounting, according to a recent report from the Bank of America Institute. New orders for manufactured durable goods fell in April, but they were up in May. We saw those numbers last week. While the famous Manufacturing Purchasing Managers Index has signaled a contraction since March. But these are old numbers. This article is a little bit old. I'm sorry, it's a little bit stale. It is possible, right, that these tariffs could support momentum going forward and potentially reverse some of these slowdowns. Yes, I think that's what's going to happen. New tariff costs on labor issues do exist. Reshoring has been all the rage in corporate America since Trump's first trade war with China. The Biden-era Chips and Inflation Reduction Act heavily subsidized companies willing to make semiconductors and clean energy in America, which I was in favor of. While U.S. manufacturing accounts for just 8% of total employment, reshoring has created 2 million jobs in the last 15 years, according to the Bank of America. This is the problem. Manufacturing, of course, has been reduced. It's been, just said, 8% of jobs. In a survey of 56 analysts from the Bank of America covering roughly 1,200 firms, roughly 60% said production will continue to move back to the USA, at least modestly, if tariffs remain high. Those following industrials and manufacturers expect the greatest shift to the US in many, 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 many eons. There are still obstacles to coming back stateside, though. According to the survey, 54% of the analysts said issues finding skilled workers would be a significant impediment for companies, but that's true, but skilled workers depending on the skill set, you can have a skilled worker in 6 months, a year, 2 years. Welders and some specialized things take a little longer, but you can get them back. It's not a matter of it's not a matter of if, it's only a matter of how quickly can you do it. Higher labor costs are one of the primary reasons manufacturers shift away from the U.S. in the first place. While a 2024 survey from the Cato Institute found 80% of Americans think the country would benefit from increasing manufacturing employment, just a quarter believe they would be better off individually working in a factory. We've talked about this a ton. Are these people seriously thinking that folks prefer working in a mass marketer like Walmart, or working in a warehouse, moving stuff around in a warehouse facility, which is where the jobs have been going recently? I don't think so. I think they would be much happier working in a factory environment. They just don't realize it. If firms struggle to fill positions, they are forced to figure out how to improve productivity without hiring people. And there's where the conversation turns to robotics, including Tesla with humanoids. 2/3 of the respondents to the B of A survey said any production of a shift to the U.S. would require significantly more automation than in order to onshore. Lutnick's ability to continue making trade deals might matter the most to small business. They account for 98% of American manufacturing, small businesses do. A lot of them depend on a specific part, for example, to complete their manufacturing process. They get the part from overseas, and they not necessarily able to get it domestically. But we have seen some of that as well. I've reported on that earlier, where companies are starting to pick up the phone and see if they can find somebody locally to make those parts that they would traditionally buy overseas. Commonly, getting that one part, if you've got a $10 item and you've got a 50-cent part that's going to go to 70, that's not really a significant issue. And, you could pass that along or eat it. Okay, this morning's hot numbers. The hot numbers are Trump is at 51%. Truthflation popped up a little bit to 2.23. VIX popped up a lot to 17.34. I am guessing that has to do with the whole issue around the big, beautiful bill and whether it will pass or not. All right, so what we have right now is about where we've been all morning. Tesla is down 0.92. It's been down a little more than that. It's been close to break even in the beginning. Who knows where Tesla will end up today? But with the numbers coming Wednesday, with all the labor numbers coming Thursday, I mean, that's what people are now focused on for Tesla and for the general market. So things could be a little bit flat the next day or so as we wait for those two results. The Dow Jones is up only 0.26, the NASDAQ up 0.19, and the S&P up 1.17. However, remember two of those, the NASDAQ and the S&P, those will be record highs. We've got the Magnificent Seven almost all down. Meta and Microsoft are up. Meta nicely, 1.22. NVIDIA down 0.46. And we've got the Cathie Woods all up this morning. And I'm going to guess that means bonds are, and by the way, some of them strongly. ARC-G up strongly. CRISPR up strongly. There was some CRISPR news over the weekend. Very, very strong moves in the Cathie Woods this morning. Let's go ahead and take a look at the bonds. And I just hit the wrong, boy, my tech has been all over the place this morning. That's not going to work either. Go back this way, hit that, then we can hit this. And then we finally get to the bonds. All right, they're down 1.4, down to 4.269. We were under 4.25 last Friday, so we need more, down. All right, we've got the oil numbers are down also 56 cents, back under $65 for Texas Intermediate. Natural gas down 7.33, back down to 3.46. It was almost, I think, was it over 4 for a minute? We have gold gaining this morning, up 1260, 3,300. Silver down 0.37 at 35.9, and copper down a full percent but still over $5, $5.02. Bitcoin down 654 at 106.8. And that, I think, the dollar is down a little bit in trading. So it's down 10% for the year. Some people are all upset about that, but I'm not sure that is I'm not sure that's very important right now where the dollar is standing. Overall, it's good for exports. It's good for travel. Apparently, Americans are traveling in Europe like crazy. Saw some headlines over the weekend that were saying that Europe is not big enough. They need to make Europe bigger so that there's more room for all the American tourists. Okay, so there you go. That's what we got cooking right now, as mentioned. Larry Goldberg later today, then Brian White at 7:45, and the final number on Tesla this morning is heading up, only down 0.76 at this point, but it's kind of really, actually, if you look at the chart, it's kind of moving that way. All right, that's all I got for you right now. I'm not that grumpy. This is as grumpy as I get, and I will be less grumpy when you see me with Larry later, because I always enjoy talking to Larry. All right, it's been great talking to you, and see ya.